Joining us now is Tony Wang from T. Rowe Price, manages the firm's Science and Technology Fund. Tony, what does Tesla have to say? What does the model have to be on full self-driving to make you comfortable with the valuation here at 80 times earnings?
Yeah, I think it's a really good question. I mean, clearly Tesla's not just valued as an auto company, and so I think that we really need to see the advantages that Tesla's demonstrated in the past really extend. They have a really big data advantage, as well as now they're extending their compute advantage. So they bought a ton of GPUs, and I think that they really need to show, version 12, 13, be big jumps in what they're doing, and so stepping closer to truly full self-driving. And then finally, I think that there needs to be a really solid business plan to justify the valuation. So how do we get there in terms of actually gross profit and EBIT over the long term with robo-taxis? And so I think there's a lot that the valuation commands right here, but I think we look forward to the next few months to see that unfold.
Do you have a take yet on whether you want to see that plan be capital heavy, where Tesla owns the vehicles that are out ferrying people around, or capital light, where they get other people to own them and somehow take a payment on the services side?
Yeah, I think that they probably can do a mix of both, right? So you think about what they have in the market right now is like a lot of fleets of autonomous, potentially ready vehicles that owners could lease out to a fleet, and that would be the capital light approach, or they could start their own, where they already are pretty good at making cars. So I think that they have advantage of being vertically integrated here, and so I think they could test out both business models. I don't think it has to be one or the other, and plus they do have a lot of capital, and I think part of their strength is their capital efficiency to really drive costs down when they have more volume. And so, I actually think that both paths are pretty viable.
Okay. I mean, we've talked so much about AI, the companies that are most levered to generative AI. And certainly those are some of your top holdings here in the fund. We've also seen a lot of software names sell off, although in recent days begin to rally again. And some of them rally pretty aggressively. How are you thinking about those dynamics? Is there room in a portfolio for both? Is there value to be had in some of these beaten down software names?
Yeah, absolutely. I mean, I think that these software companies aren't going away by any means. And so a lot of times when you get these really big secular narratives, they are overblown in the near term. And I think that, but that doesn't mean that these companies don't need to react and pivot themselves to adjust with generative AI. But I think that there's a lot of incumbency advantage when you think about the software companies like Microsoft, ServiceNow, Salesforce, Workday. They're so embedded in the workflow of enterprise. And so I think they've really earned the trust. And as a result, should be able to capture value with generative AI, as customers adopt that. And so I think we're just too early to really call, who is definitely a share donor versus share gainer. And so, the valuations here can be attractive, at the right point.
What are your thoughts on Amazon, which has also rallied pretty aggressively here in the last, call it, week, maybe month? We just had AWS's new head of cloud on with John yesterday. Is this a name that you would be looking to increase exposure to?
Yeah, I think they've done a great job. I mean, clearly they're the biggest cloud provider. Developers love them. And in addition, I think you've got their cloud leadership plus the retail business that has margins that can really go up a lot. I think that you saw them really build out a lot of scale during COVID. And so from here, I think you have a big potential where they're really leveraging that and showing investors what they can do around EBIT. And so I think they're a very innovative company. They hustle. And so I've been always impressed with the management team. And so I continue to like the company long term.
Tony, is AI the thing that perhaps changes the narrative in the market about the cloud, from being about top-line growth to being about profitability and focusing on things like energy efficiency in the cloud and just the profit dollars that you can squeeze out from having what's perceived to be, at least, a better AI platform for customers to build on?
Yeah, I mean, I think that, in terms of the business model, I think we're going to see probably a focus on top-line growth among the cloud providers to grow and provide really good generative AI solutions where they invest and show their clients, their customers, what they can do. And I think on customers, I think that they're going to look for generative AI solutions in terms of really strong ROI payback on the cost, but then also, more importantly, the strategic abilities of generative AI to enhance their decision making. So I think that there's going to be, both top line and bottom line benefits that clients are going to be looking for, and the cloud providers will look to really need to provide a very compelling suite of products to attract customers to really invest on their platform.